trending tickers we're watching today. Disney has nominated 12 people to its board of directors, formally rejecting the ones put forward by Nelson Peltz. The media giant also disclosed CEO Bob Iger's compensation, which doubled in 2023. There you're taking a look at shares pre-market. They're down by about 0.7%. What they had mentioned within this is that the board does not endorse the nomination of Nelson Peltz and James Rasulo put forth by Trian Fund Management. However, of course, some of the notable figures that are the ones that were put forward by the brand, everyone from Lululemon CEO Calvin McDonald. You've got, of course, the GM CEO as well, Mary Barra, in there. And then additionally, Mark Parker, who is one of the noted and famed former CEOs of Nike as well here.
Yeah, Safra also among them, CEO of Oracle. You have the former CEO of Morgan Stanley, James Gorman. But talking about why Disney fighting back against Iger and taking issue with him being named as one of the board members here. A couple of interesting points that I wanted to call it here, just in terms of why Disney rejected Peltz's board seat. A couple of things. He did not disclose one strategic idea for Disney. This is according to Disney's board. His assessment of Disney seemed oblivious to the ongoing secular change in the media industry. They also went on to say that he doesn't have much experience in media and technology sectors, and also some concerns about how the partnership with Perlmutter, his relationship there. We know that Perlmutter has a very complex past with Iger and with other Disney executives, so exactly how that is going to impact Peltz's agenda with Disney, with some of the issues that Disney really brought to light in this rejection of Peltz and his proposal should be one of the names nominated to this board. I also want to point out what Bob Iger said in a letter to investors yesterday, just reiterating the vision that he has for Disney, saying that once again, he wants to make the streaming business profitable. Obviously, that has been a top priority for Iger and for the team at Disney here over the last several quarters. We've heard about that time and time again during earnings calls, but also turning ESPN into that preeminent digital platform, really elevating what they already have right now, the content that they have at ESPN, transitioning that to the next era of media, and exactly what that looks like is one of the big questions here, one of the big focal points for shareholders. As we know, we're taking a look at that one-year chart of Disney. We are off the 52-week low that we did see back in November, but not too far off. It's still off about 6% in the last 52 weeks. So there is a heck of a lot of pressure on Disney to right-size the business. The question, though, is how long is that turnaround going to take to play out?
And how much does Bob Iger continue to make in compensation in that turnaround strategy?
Heck of a lot of money, right?
$31.6 million last year. Yeah.